Hey guys, what's up? This is Stock Retail coming back to you. I'm excited to share a preview of tomorrow's earnings. If you're like me, boy, it's going to be hard to sleep tonight. Very excited about tomorrow, what that's going to look like. Hearing from Adam again, always great when we get to hear from him and the executive team, and kind of just, in a way, have a fireside chat with them, hear what's on their minds, hear how they feel about the business, hear what's coming. So I'm very excited about that. In advance of that, I wanted to give you some previews of my forecast, partly for fun, but even more importantly, to fight some FUD I see out there. We'll talk forecast. We'll barely touch once again on some of the Bitcoin and tokens thesis, although that's not going to be the focus of this video. And we'll talk a little bit about RSUs and some things I've seen out there. So without further ado, let's kind of get into that. First, I want to just kind of remind you, well, for those who've been around, reminder, if you're newer to watching me, this is a little bit about me. So I've got a background in business specifically and in forecasting specifically, forecasting and planning. And so I want to just kind of address something. When you are forecasting, you need to take all of these sort of inputs and outputs and think through all of those. It's not really possible to have a very accurate forecast if you aren't thinking about all the pieces of a business model. And I've always said, and I really should get down to this. Maybe I'd do a video kind of walking through how to read an income statement, how to read a balance sheet, how to think through sort of the strategy of a business, those kinds of things. So I'll still try to do that as just sort of a free educational effort sometime. But the reason I'm bringing this up here in this forecast video right off the bat is you're seeing, at least I'm seeing, a lot on Twitter in particular, and I'm sure it's on YouTube and other formats, where people are sharing what I would view as very unserious, very sort of uneducated forecasts. And you've heard me say before on this channel as well that somewhere between hopium and despair lies the truth. And I'm going to be a channel that attempts to share the truth. And the reason I love doing that is because even within a realistic view of our business and what's actually happening, without hopium, I can sort of ironically, I'll say, look you guys in the eyes and say, I believe in this squeeze. And so I'm going to stick to facts and stick to, or at least what I believe are the facts. Today's a forecast discussion, so of course you can disagree with me. But I'm at least going to stick to informed points of view. If you are newer to this channel, I'll just give you a couple examples just sort of on my resume. It was clear back in September of 22 that I made videos. You can go see these receipts. Told you all that Q2 and Q3 of last year were going to be profitable. So I said that, more than a year before those results were announced and got that right. I've had, I don't know, 8 to 10 quarters in a row of beating Wall Street in terms of accuracy on my forecast for AMC. So feel confident on my side to share these things. This is probably the most unsure I've been of any quarter, so I'm going to kind of share the forecast with some humility. And we got some new things. We had popcorn expand significantly. We had distribution. We had obviously with Taylor and Beyonce. But so through the list here, I'm seeing people share numbers that maybe aren't considering what happened at the box office. So if you look at, say, Q2 and Q3 versus what we had in Q4, or even if you look at Q4 year over year, how is it versus last Q4? So we're going to talk through. Obviously, we're still a movie company. Yes, we're selling popcorn and candy and had distribution, but we are a movie company and we sell tickets to see movies and we sell concessions when people come and see movies and we sell merchandise when people come and see movies. And so we need to track the box office. That's important, and it does impact our results. Obviously, we're going to talk about Taylor and Beyonce a little bit. That is just such an opportunity to celebrate something that Adam and the team did. We did have the popcorn expansion, so that's something you have to consider in the forecast. If you haven't heard me say before, I know I've said a few times in some videos and maybe explained on Twitter, in the length of a quarter, so if you go from like day one of the quarter till the last day of the quarter, if you track the stock price of Hycroft and you kind of multiply the change in the price times how many shares AMC has, that sort of, let's say, paper profit and loss is going to show up on the earnings report. It's like a non-cash item, and it basically counts towards either revenue or expenses. So as long as we're holding that stock, that is in our earnings. And so if you're forecasting AMC earnings, you have to account for that. And so I go look, all right, what is the change in the price over the quarter? How many shares do we have? And so what's the impact to the forecast? Well, I'm seeing a lot of people tossing out numbers or even asking ChatGPT, and it's not considering some of this depth of analysis. You have to consider foreign exchange. So all of the tickets we sell, let's say to you European apes, love you guys. Shout out to the European apes. Got a lot of friends in Europe in this movement. But every time we sell a ticket over there, that gets translated in our earnings back to dollars. Well, if the dollar, let's say, weakens against the euro, or the other way around. Well, both ways it matters. But if the euro is weak against the dollar, then it doesn't translate into as many dollars. Well, that impacts your earnings. That impacts your revenue. So that matters. And so I do look at that. I look at our debt payments. You got to remember we had some debt pay down during the quarter, so that impacts our expenses in a very positive way. We have less debt payments. Well, you've got to factor that in. And on and on. So inflation, there's something called impairment. You can go find whole videos I've done on that. A non-cash expense, by the way. How are ticket prices tracking? How are we doing on merchandise sales, popcorn, market share, even how's A-list and some things like that. So there's a lot that goes into our earnings that you have to think through. And I just share that, and I'll get off this topic because I know it's not as fun to look at. But as you see people on any forum, Twitter, Facebook, YouTube, if they're not really thinking through this level of detail, then you have to just take some caution. And in particular, the box office we're going to talk through, because if someone just expects, it's like the joke with stocks, stonks always go up. Well, not everything is always just up and to the right. Sometimes you have moments of pause and gathering yourself and then going into the next chapter. So let's talk through that. Speaking of then, the box office, just focus here on the far right, these last three. And by the way, so what I'm going to give you here at the beginning is a dose of realism, but don't worry, before the end, you've always heard my bullishness come through very loud and clear, and I am still as bullish as ever. But a lot of this goes back to things I told you in another video, I want to say at the beginning of November, end of October, where I said, hey, the strike impacted us. Let me show you what that looks like. We had movies get moved out, and now you're seeing the impact of that. So you can see Q2 and Q3 were nearly 2.7 billion at the domestic box office each. I've shared in other videos, I track the domestic box office, but when I translate to earnings, I have some math where I kind of know what's AMC's total revenue, because obviously we have revenue overseas as well. But if you just track the domestic box office, it's an easy number to track. I've shown you guys some websites where you can go do that for yourself. And it's just a nice way to keep track of kind of one health indicator of our business. Okay, so the strike absolutely impacted Q4. I'm even going to remind you in a few minutes some of the movies that moved out. And so you can see we went from 2.7 billion at the box office all the way down to, it was like 1,857. So it was 1.86 billion, let's call it. Well, that is a drop. You don't have that drop without an impact to your revenues. And so that happened to AMC. I'm showing that in the forecast. Actually, I guess I should read my own slide. I told you I'd tell you in a few minutes, but here you go. So Ghostbusters, Dune 2, Kraven the Hunter, there were some other movies. All of those used to be in Q4. We would have had a really rockin' quarter, but those all moved out. Now, the good news, we still have those to come, right? So in a way, it's delayed gratification. We lost those out of Q4. We still have those this year. And of course, Dune 2, who could not have noticed how amazing that is starting to look? So very excited about that. But we did lose that out of Q4. There's impact to that. So anybody just kind of telling you, Q4 just continues growth off of the back of Q3. Well, just look at the box office in Q3, that amazing quarter we had, and the drop from Q3 to Q4. It's not logical to, even right there, we can just stop and say, if someone's telling you we're going up since Q3, I don't think they're considering the box office. So that's important. Now, again, that may sound negative. Don't worry, I'm going to get bullish with you. So on a yearly view, and here's a little bit of that bullishness, in spite of the strike impact, I still have us, now remember, 3 of the quarters have already been reported. So if you look at this calendar year 23, that's what we're looking at here. 3 of those quarters have already been reported. And so most of the year is what you call actualized. And then I'm just forecasting Q4 based on an actual box office. So that should be somewhat accurate. You can see how radically we improved from 22 to 23. And you can see 21. I mean, that's still some lockdowns and things. That's not even, it's dropping so low, it's not even on this chart. And then what I want you to just start to turn towards is the forward view. I've said in a few videos, I tried to sort of prepare you for the strike blip, but also, the bullishness there is that I am very comfortable. Adam has built the war chest. We have the cash. You've heard him use that language, survive, then thrive. We have the cash to survive the strike blip. I've been trolled, especially in the last week, I know they're just alt accounts of the same old shorts who just keep recycling into new accounts because I block them every time they come at me. I've had a few trying to say, oh man, you can't even read a balance sheet and stuff. It's like, bro, calm down. I have two master's degrees in business. I have multiple master's level classes in how to read a balance sheet, managerial, accounting, finance, etc. Not to mention, real life experience at 21 years at a Dow Jones company. Uh, I'm telling you, I've been reading the balance sheet. I've been reading the income statement. I've been looking at the movies coming. I've been looking at how popcorn is tracking. I've been looking at our debt payments. I've been looking at our rent payments. Every single line in what you call the P&L, profit and loss, or just people call it the income statement, and every single line in the balance sheet. And, while I'm giving you a forecast and it's possible for me to be wrong, I'm telling you I have a very high degree of confidence this company will not run out of cash. Adam has built up the war chest. We are fine. And so then you start to see again, more bullishness that as we finally get past the strike blip, by the end of this year, I've told you very clearly many times that that's my belief. As we round into Q3 and then especially Q4, things start to look better. And so even with the strike blip, because of expanding popcorn, because of expanding distribution, Adam has effectively landed us. And go through that video that I did in early November. It'll really help you understand that basically, even though we have the strike, the job that Adam's done to sort of replace that revenue has us, I believe, still improving year over year on our earnings. Now, much slower this year, but boy, wait till next year and tease. I'm going to show you that a little bit later. So, good news is we're dealing with a blip. You're going to see that again Q1. You've seen Adam at one point even tweeted about it being anemic, which kudos to him for speaking up, because after that, you started to see Disney and a few others putting new movies on the release slate. Some of those are coming later this year, like Moana 2 was announced like within a day of Adam saying, hey, we need more. There was a couple others that were announced from other studios. And we got the distribution rights, the exclusive rights here in the US for Matt Damon and Ben Affleck's, the U2 documentary. So good things have come out of Adam speaking up, but he was speaking truth as well, that, hey, we're in that strike blip. Things are getting better in the future, though. That's what I want you to focus on. So bottom line for Q4 now, I just wanted to point you in that forward view a little bit before I went through this, because you're seeing some people, I think, saying kind of to the moon type of results that you're going to hear tomorrow. I'm not going to tell you those numbers. I'm going to tell you what I really believe in a realistic forecast with that level of detail I talked about. But I'm going to show you why I am still very positive about it. So first off, earnings. I do have a set of loss for Q4. I'm going to talk in a minute about how much of that loss is due to non-cash expenses. So kind of hold your breath on that one. And again, I believe that Adam has sort of built up that war chest that we needed. So all good there. My kids love it when I say all good, fam. And I don't know, they don't love when I steal their slang. But anyway, so earnings minus 132 on the quarter, but note versus last year. So Q4 of the year before was even lower. So we're up 55% on our earnings. Last year was like a negative 288 or whatever that kind of comes to. So 156 million to the better year over year. And I'm going to show you in a minute how the box office barely grew. So Adam and team have made our earnings better by 156 million on not much box office growth at all. And you can see to the right. So what's that coming from? Well, we've added popcorn year over year. So when you start to get into what you call anniversary, like comparing one year to the last year, then you start to see what were the big changes year over year. So we haven't yet anniversaried popcorn growth. So like when we have Q4 of 24 and we compare back, now we'll start to see some growth in popcorn. Everything we have in popcorn now is up over 2022. Market share, there was growth in the quarter because of Taylor and Beyonce. If you remember hearing like the amount of market share we had on the attendance of those movies was significantly higher than a normal movie. And then I'm sort of forecasting that there's sort of a spillover effect of someone went and saw Taylor, then perhaps some small percentage of those people came back to an AMC to see more movies. So we've got some gain in market share in my numbers. Some of that because I know it was actual, some that I forecast. We had just the distribution money itself. So when other theater chains all around the world showed Taylor and Beyonce, AMC got a cut of that. That's something we didn't used to have. So that's growth year over year. And so you'll also see that, so I've got revenues up and expenses down. Now, a lot of the expenses, that comes from things like if we had closed a property that was underperforming, that's lower rent. If we had paid down debt, that's lower interest payments. So I keep track of that. Every time Adam announces they've paid down debt, I go see what it was the interest rate, and I can put those savings right into the forecast. All right, so the revenue, I've got us at just over 1.1 billion. You can see that's up 129 million year over year. So you can see here that revenue grew 13%. And here, why don't I just skip to, actually, I don't have the box office next. We'll show the box office in a minute, but you can see on the right, I'm telling you, that was almost triple the rate of the box office growth. So AMC grew revenues faster than what is the core of AMC's business. So what you should be hearing is things like expansion of sort of, let's say, margin dollars, is something you kind of call it in business, expansion of margin dollars on ticket sales and on concessions. In other words, consumers were paying more for that. And then also expansion of market share, and then just the addition of new business lines, distribution and popcorn, etc. So we grew our revenue year over year by more than the sort of core of our business, the box office grew. On the expense side, we decreased expenses. So think about if I told you, hey, would you want to have a management team who could grow their revenues while shrinking their expenses? That's kind of working magic. There's not a lot of businesses where you can do that. Usually to grow revenues, you also have to grow expenses, and you just try very hard to grow revenues faster than expenses. Well, remember, we had some closure of some properties, so there's rent down. But still we drove higher revenue, and then we had those debt payments. Where you're reducing interest payments because you've paid off debt, so you're just reducing the amount of checks you got to write. Basically, think of it like that. So I'm showing that loss, but I just want you to see. In spite of the headwinds, that's kind of another normal business term. So Adam and team faced headwinds in terms of the strike, and those foreign exchange rates. In spite of headwinds, they've been making ground. Now, I want you to continue now, and this is the bullishness. Imagine what happens as, I told you, like eventually Highcroft results, when that starts making money, that's going to be in our revenues. If foreign exchange, if the euro starts to shift against the dollar, it's going to increase our European sales. And when movies come back, that's the big one. And that's why I'm so bullish on Q4 and beyond. When movies come back, we've already proven the thesis. Q2 and Q3 were profitable on half of the movies that we kind of had in 2019. But what do you think when movies come back? That's why I'm extremely bullish. And the question has always been, will Adam set us up to survive then thrive? And the answer to me is a clear yes. So here's the box office. I kind of promised I'd show that. So that's that 1.86 billion we had in Q4. That's an actual. You can go look that up. Box Office Mojo is a great site for that. There's a few others that I like to use. I've shown you in some videos. So you can see we're only up 5% on the box office, up $80 million at the domestic box office. And that was in spite of that strike. So again, what happens when we finally get past the strike impact, which you're going to see for a couple of quarters? We're not out of the woods on that one yet. We're going to be living in that for a little bit. Again, please go look at that November video if you haven't, all about kind of a long-term forecast. But box office still grew year over year in Q4. And you can see there's that 5% growth at the box office, but we drove 13% growth of AMC's revenue. So here's kind of the takeaway from that. And I'm going to lead into the next slide here. When movies do return, as popcorn keeps expanding, so remember in Q4, we barely had part of the quarter where we added, Amazon, Kroger, Publix. As popcorn continues to expand, either through doors or just through consumer awareness and sort of an increase in market share. Remember, there was a lot of days too where Amazon was even out of stock. So imagine we stay in stock, you're going to have more sales. As distribution becomes the norm. So remember, a lot of you probably saw, and I even posted about it, we were hiring a VP of distribution for the company. So clearly there's plans to grow that business of distributing entertainment. So that's going to be great. As candy expands, so far, frankly, I think the quality of that product is fantastic. I love it. I can see you guys buying it all over my Twitter feed. I would not be surprised if eventually maybe there are opportunities, or at the very least, apes, continue to support it and enjoy that. He has hinted that perhaps someday beer and wine is coming. Let's see if that comes to fruition or not. I trust him and the team to be doing the analysis on sort of the profitability and what's the value add of doing that. I do believe he'll continue to pay down debt. I think now we're at something like 10 of the last 12 quarters that we've been paying debt down, which then decreases your expenses again. And eventually impairment will be completed. So there's this goodwill impairment thing you've gotten trolled on. Again, you can go find videos I've done on that. It's a non-cash expense. I cannot stress that enough. But eventually that's done, and so that improves our earnings. And so when that all happens, now, you can see the asterisk at the bottom left. Future years kind of assume everything I just talked about. We flip. I'm already forecasting, and I had said that in the November video that I'm forecasting us at positive full year earnings in 25 and 26, and that we're growing at very, very quick rates. Go find videos too that I've done on sort of the valuation of the stock. I think the video might be called like "What's AMC Worth?" I've done it twice, but that's the more recent one. If you do a price to earnings ratio for the stock, if you do a price to sales ratio, or if you do what's called a PEG ratio, price to earnings over growth, just look at 25 and 26 and think about that growth rate and what a price to earnings. By the way, I showed you in that video an industry standard price to earnings, and even where AMC used to be on price to earnings. Hint, it was in the mid 20s. And so I kind of educate and talk about how those metrics work. And just the point is, our stock is deeply, deeply, deeply undervalued by any of those standard metrics: price to sales, price to earnings over growth. And I explain why you wouldn't even use the PE or the PEG ratio right now. That's why I use that price to sales ratio. Go check that out. But all you got to really see is this is still very up and to the right. So even though I'm showing you that loss in Q4, I'm telling you we're still living through the strike blip right now. But the point is, you have a manager and a management team in Adam and the team who saw that strike blip before apes did, frankly, and prepared for it. That was the dilution we saw. He paid down debt. He gathered cash. It's kind of like a squirrel gathering nuts for the winter. But boy, the spring is coming, I believe. And pun intended, there is a spring on our stock, I also believe. A couple things about cash then, I guess, since I was also just talking about that. Just a reminder that in my earnings number, in that loss that I gave you, that minus 130 plus, there are non-cash expenses. So earnings, when you hear Adam talk about earnings tomorrow, you're going to have to also think through, that does not mean, if we have a negative number, if I'm right, and if we have a negative number, that does not mean that's how much cash got burned or that's how much cash went out the door. There are a lot of non-cash items in expenses. So there's the D and the A in EBITDA. EBITDA is earnings before interest, taxes, depreciation, and amortization. So that D and A, depreciation and amortization. I have those in my forecast. Those are non-cash expenses. They're basically actually a nice to have, because what they do is they reduce your income so that you pay less taxes. It's an incentive to invest. It's just a US tax code kind of a thing. So if you ever see our earnings in your mind, if you're thinking about cash, because Shorty wants to scare you about cash, you need to know, hey, there's some stuff that kind of impacted our bottom line earnings, but actually isn't cash going out the door. Same thing with impairment. If it tends to be in Q4, I've noticed that we account for impairment. I've got whole videos on that. Go check that out. I am unconcerned about that. I did go ahead and forecast some impairment in this quarter, just kind of guessing that we're not done with that. It's something that I believe will work a little bit like depreciation and amortization. It's kind of spread over a number of years. Has to do with, I believe, so you're getting some opinion here, not fully sure this is fact. I believe it has to do with those properties we sold, and if we had bought some of them for more than we ended up selling them, we've got to kind of factor in some of that loss over time. And then also it can have to do, and again, this is in those videos about impairment, you have to sort of value your current assets in terms of the cash they're generating, and are they really worth what you paid for them? That's kind of the really oversimplified view of what that is. But it's a non-cash expense is the point. You guys have seen about NCMI, so that's kind of the advertising group. We pay them like 9 million-ish a quarter. Well, that's actually a non-cash expense as well, and then we often end up with that stock that people get confused about. We don't buy the NCMI stock. We're just kind of in a shared group with that, and we end up holding some of the stock. A long story there too, but non-cash expense. And so you can see, I told you that loss was at like 130 million, but our non-cash expenses in my forecast are over 150 million. So I'm unconcerned about cash. Okay, yearly revenue. This is just another forward look to help you out as we get into 2025 in particular. So you can see why I said actually first, oh, by the way, this is kind of an old view. I haven't refreshed this, and I'll do that soon, but it still gives you the idea that in 2024, I believe will be pretty flat on, this is AMC earnings. I believe will be pretty flat, but our, revenue, pretty flat on revenue, but our earnings will maybe improve by a bit. And that just has to do with the team offsetting some things. And then in 25 and 26, that's where I believe our revenues start to, you can see I put in the 2019 line. I talked through this in much more detail in that November video if you want to see, but the point is we continue to improve. We just got to get through that strike blip. You know, I'll say that over and over until we all understand it, because that is not a long-term business model problem. It is a blip. That is why I use the word blip, and it will be over. And then we will be sailing. We proved the thesis in Q2 and Q3 on half the movies we were at profits. That's before popcorn expansion. That's before distribution. That's before candy. That's before more movies come back. I almost want to promise, but I just don't want to out of humility. But I am very, very, very confident this company is going to be highly profitable. All right, other topics just want to remind you of, and then we'll get to a summary, and then we're done here. Continue to check out the Bitcoin sort of tokens thesis that I've been sharing. That is at play right now. I mean, you've seen Bitcoin running in the last video I did before this. Even without the tokens thesis, I just told you in some ways why is Bitcoin going to run. I hope some of you caught that, because I shared that before this big run. And I had talked about it as well, I think last November and December. So there's a couple videos on that, or you can check my highlighted tweets that kind of start to share a little bit about why I have a feeling some of this Bitcoin run, certainly a supply and demand, and I talked about that, but some of it is related to cleaning up of the tokens. I think that's coming. And if that comes, boy, I always say no dates and no prices, but I mean, I don't even know how high we could run. No promises. That's just me thinking out loud. You've been seeing talk about the executive stock options. So I'm going to just do a 30-second flyby on that. So RSUs, restricted stock units. I was a mid-level executive at that Dow Jones company. I had stock options myself. I was able to choose between RSUs and RSOs. I had RSOs because I was at a growth company. Go ahead and look that up if you want to learn more. To keep this short, I'm not going to cover that. But our executive team effectively takes a significant portion of their salary, really. It's their salary that they receive in these stock option grants. Notice that I use the word grants. So they are not really, so it's these sub-bullets. They're not really buying shares. So I love when apes get excited about this. And so I don't really correct people because it's awesome. It is still great that our executives are vesting, is the word you want to talk about. So that second bullet, not exercising, because it's not like the options we have. They're not exercising options. They're vesting in them. They're being gifted these shares. But I hesitate even to use that word gifted, because if you'll recall, I think at one point in 2021, Adam was talking about maybe like 60% or even 2/3 or something of his salary is in these stock option grants. So our executives at AMC take a little bit less cash through the year, and then they receive these stock option grants. And for us, the reason it's good, so that third sub-bullet, it's an economic incentive. I have a whole video from this time last year going through those RSUs, how that works, showing you all of the sourced documentation on how many shares Adam had at that time. So you can go see that, sourced with data for you to fact check. Some of you know I often say no trust me bros here. So if you really want to go deep on RSUs, go to that video same time last year. But effectively, I just want you to know it's not really buying shares. If you see any that are what's called disposed, or Shorty's going to try to tell you they sold shares, when you get these stock options, you have a tax hit. And if you don't, like let's say my company gives me 1,000 of them. If I keep all 1,000, I'm going to have to pay cash out of my pocket on taxes. Well, instead of cash out of my pocket, how about if I take 750 of the shares you're giving me and I act like those other 250 got sold to cover the taxes, and I just immediately give that money to the government. So I never really got the 1,000 shares, so there wasn't really, from my side of things, really a sale. I just told my company, hey, just give me less and give that other money to the government for my taxes. So that's what that is. If you ever see Shorty trolling you about any kind of what's called disposition or sales on these stock options, it's really just the executives covering taxes. You can see Adam still kept a significant portion of his options. And the point is, that means he owns, I believe he is still the biggest retail shareholder that there is. He owns more shares than anybody in retail. That is incentive for him to help our shares go up, right? He has this economic incentive to ride with us. That's why he said, I ride with you. So I just honestly tune out any other noise personally, but wanted you to know a couple points on that. So, all right, that 30-second flyby was probably closer to 5 minutes. But finally kind of rounding out. Actually, before we do the summary, I want to just give a few sort of disclaimers. These are things, if any of this stuff starts to happen in the next couple days, or if some of these things are announced in the earnings call, then boy, all bets are off on what could happen with us. So I've given you my forecast, strictly kind of a business numbers view that I think Adam may, tell us tomorrow. Obviously, like first bullet point, if there's upside in distribution, I had to make some assumptions about how much money we were getting out of the distribution rights for Beyonce and Taylor. And I made assumptions about how much, merch we sold and some other things. I got trolled by a few, I believe they're non-apes, large accounts back when I forecast how Taylor and Beyonce would do. Frankly, in the end, I turned out to be right. And so, I don't mind being a little bit loud about my points of view. The more that keeps happening, the more I'm just like, all right, I'm ignoring the people who want to throw shade at me. But I will still say there is a chance there's upside to my view on how much money we made on distribution. And so if Adam comes out tomorrow and we did significantly better than what I included in my forecast, then I'm going to applaud with the rest of you. And I'm going to be glad that I'm wrong and that we did better than my forecast. So that's the first thing that we could see tomorrow that's probably risk to the numbers I'm sharing with you. But the good news is that's, I think, upside risk. Mergers and acquisitions. So I've even dropped some breadcrumbs through the years and hinted at some things I've wondered. I'll go all the way back to 2021. I was a yes vote back then on our shares, and what I really wanted back then is I wanted us to buy a studio, and I was not, very hidden about that. I think I shared that with a few people. I'd have to go find some receipts and see if I said that publicly. But the point is, if he comes out and announces anything with, say, like a Paramount, a Warner Brothers, whomever, boy, that will cause a lot of shockwaves, and I think some really good things for us. I'm not saying that's happening, by the way. I am not at all saying that's happening. I'm just thinking through what are some wild cards out there that I can't really predict that would almost just make my forecast like a moot point. It wouldn't matter. So if he comes out, and this is the big one, I think, probably of these, the most possible right now. If he comes out and says, hey, this 2026 debt that Shorty is trying to put in your face and trying to make you afraid of bankruptcy about, I have refinanced that, and now that debt is not due until, I'll make this up, 2030. Then the short thesis, you and I both know it's dead, but then the short thesis is just like demonstrably dead. If we don't have any real debt maturing for, 6, 7, 8 years or something, and I'll go back, and this is our view of how we're growing, like, forget it. We'll pay off that debt easily just out of the business. You won't even need to sell shares anymore. So that's all Adam has ever needed. That's all we apes have ever needed is time. And if he refinances the debt, what you've bought is time, and shorts will have a real problem. And so if he was to announce that, I just would almost think pandemonium ensues. Like if he says there's no debt due till 2030, we've got all the cash we need, now I'm going to start to invest in growth. Whew. I have no idea. I would not even try to predict what would happen to our stock, but I like our chances if that was announced. And then I've told you about the tokens thesis. Go visit other videos for that. I've been starting to sort of pull back the curtain on why I believe Bitcoin and AMC are starting to be a little bit linked, and why we may see the tokens get cleaned up, and that could cause a squeeze. And then just market pressures. You can look through my highlighted tweets. I've shared why I believe Shorty is effectively managing their positions through inflated valuations on other stocks. Like look at the Magnificent Seven, look at the SPY. I don't really think shorts are sitting on a ton of cash, because if they were, I believe they would close their positions on AMC. But they know if they do, we squeeze, and they get margin called and all kinds of problems. And so if there's any kind of downward pressure on the broader stock market, boy, that could cause some problems, and that's very squeezy for us too. So I'm just saying, if any of these things start to happen, this almost it makes any earnings forecast I'm giving you kind of not so important, and a lot. These become catalysts, I guess. These are really catalysts. Okay, summary points. Finally, there. Haters are going to hate. Just wave them off, right? Well, I guess I should say shake them off. We have cash. Adam will give us an update tomorrow on what is our actual cash position. But remember, throughout Q4, we were in part trading shares to pay off debt, and in part we were bringing in cash. And so that cash we brought in was significant. It was material, and we, in my opinion, are fine to get through this strike blip, which is the second point. Everything going on right now in Q1, what just happened in Q4, that dip in the box office I showed you, Adam talking about us being anemic. Again, go back to that video in November, go back to other tweets I've given you. This was all known. All you have to do is look at the movies that are coming out. You can see them by date. You come up with a forecast for those movies. This was all knowable. This is not a surprise, and this is not a disappointment. That is why I was trying to show you that, because I saw what I believe are fake apes trying to build up completely false expectations in your head so that you would be disappointed. I believe they're managing your emotions. And, I continue to believe that, and I will continue to fight for us because I want us to win, and I do not want us blown about, with manipulation. Short and distort doesn't have to mean that I only say negative things. If I give you, so-called hopium, and then it doesn't come true, you're very disappointed, and now I've got you where I want you emotionally. So that's why I try to stay in that place of what's real. And so that's what I'm saying. Hey, if you're seeing voices that are either overhyping or pushing over disappointment, I'd kind of like raise an eyebrow at those voices. Look for the voices, I've always said on this channel, of credibility and integrity. Someone who has both. You need both. Someone can be credible but not honest. Someone can be honest but not credible. Find people who are both credible and have integrity and listen to those voices, and frankly do your own DD and listen to your own voice. All right, so then third bullet in summary, movies are coming back, guys. Just look at the box office releases. I've shown you a few websites you can kind of go do that on. Maybe I'll try to refresh in a future video and show you those again. But you can just even do some simple internet searches for kind of 2024 movies, and then look at 25 and 26 of what's already out there as well. And a lot of the really big movies have still moved from 24 into 25. There were some really, really big movies, and why I believe 25 is going to be so big. And then by 2026, if you think of it like a supply chain, Hollywood is ramped back up all the way to bright, and we're rolling. And so movies are coming back. Only this time, now they're, forget the Q2 and Q3 where we just had profits. Imagine even more movies than that at a time when we have more popcorn, more distribution, we have candy that we didn't even have, and who knows what else Adam is implementing over the next year or two. So again, that's why my future view is very bullish. Also on the future of Highcroft, look at that stock, look at the performance the last few quarters. That has shown up as a loss on AMC's income statement. I do not believe that's going to happen forever. I am proud of what the Highcroft team is doing. I see them busting their buns, or busting their butt. Sorry, I got 3 kids in the house. I'm usually, that was a little too careful with my wording. But whatever. So sometimes I've got little kid talk, I guess, although my kids are getting older, probably can transition out of that. But anyway, the Highcroft team is working hard. That's the point. I'll get back off that derailment. And I'm proud of them. And I think good things are coming. And I'm proud that AMC owns some Highcroft. And I would love to see us stick around long enough, because I believe eventually that's going to print money for us too. So that's a future view as well. And then again, that Bitcoin token thesis, I would not sleep on that. And finally, as always, you know how I feel. We will win. Let's go.